All right, so today we have an interview with PeopleWish, a accomplished trader. He's been posting on X for a couple years, has grown a very decent following, raised a bunch of money for charity, uh, unlike most services or most people, and is currently working on his own new service. PeopleWish, thank you for joining, and I appreciate your time. Just thank you for being here.
Thanks for having me, Ashton. I appreciate you picking me as your first interviewee put
No,
on the chopping block here. So
yeah,
happy to be here.
Yeah, no problem. So I want to first talk about how you first got into trading. Uh, were you exposed to the markets as a kid? What grew your fascination with markets? How did People Wish come to be?
Yeah, so I was definitely exposed to the markets as a kid, but I didn't really find any fascination with them, not until honestly COVID era. But I mean, every morning, Jim Cramer's on when I come downstairs from my bedroom down to the living room. My dad's watching, Squawk Box, watching Jim. I mean, every day, he's been a market participant since, his coming of age and being able to participate in the markets. Uh, I didn't really learn a lot because I wasn't interested, but it was always kind of there in I guess the background of my consciousness. It's kind of streaming through. Uh, where I really, got my feet wet was during COVID. I think like a lot of people, there was really not much to do. We're stuck in our homes and people needed to make money. Also, there were the stimulus checks, which I didn't really qualify for one of those. But I think not out of boredom, but out of eventually I needed to put my funds in a place that's going to appreciate. So it was just inevitable. I had to learn about the markets and how to kind of manage my finances at scale, which means get in the markets or have somebody else do it. I wanted to learn it myself. Um, and so I like I remember I funded an account and it just kind of sat there because I didn't really even know, I didn't know what to do. I didn't know even how to pull up a chart or I really didn't understand. Actually, when I started, I thought that, technical analysis was completely bogus. I thought it was complete voodoo.
Hmm.
Uh, and I mean, boy, was I wrong. And I think I just kind of carried the just the common thought. I think the majority of people a majority of people actually agree with that, and they think that as well. Uh, and I funded an account. I got Thinkorswim installed. I had no idea what I was doing. My dad, he would come downstairs, and this was just a couple of years ago in 2020. He lived with us, and he'd pull out his iPad. He's invested in stocks and he's got a good portfolio going. I have no idea what I'm doing, and I just my buddy, it was COVID was really bad, and my buddy he sent me an article in the morning saying that this publicly traded company cured COVID. They came out with the first vaccine. I think they've been delisted. I think they're out of business since. It was SRNE, Sorrento Therapeutics, and I just full ported everything that was in my account into it. Literally had no idea what I was doing. And it turned out actually to work out. It was just a couple of days before I was going to, well, no, a few weeks before I was going out on a backpacking trip in Montana. We were in Big Sky, and the stock literally went up 300% within the first few days of me being in it. It comes all the way back down and it goes sideways. Kind of similar to some of these stocks that we see right now, very similar charts. And once we head out, we actually drove out to Montana. We had terrible reception, and I'll never forget because the position was up 600% or something. And when I got back to cell phone service,
Uh-huh.
everything had coming back on me nearly. I
Wow.
wasn't flat on the position, but I gave back probably 80% of the gains. Uh, and that was kind of what hit it off. And I didn't continue to YOLO my port. I This was also when TikTok was just becoming a thing, and like everybody else, we're kind of exploring the app and just kind of understanding it. And I think many of the uh like FinTwit types and people launching courses were experimenting with marketing and just kind of telling the world about what they had to offer. And so I found Cam the Man. I think it's like Normac Day Trading. It was like a public group that you would join. It had like 50,000 members, and he would sell his course to you and kind of teach you how to day trade. And that's where I like really started to fall into, technical analysis. But yeah, I mean that's essentially the beginning, my origin story trading. Um,
Yeah,
yeah.
yeah, and so I mean, you just touched on it a little bit. Obviously, you're a little bit unique because you did tap into day trading, and you do have that day trading skill set, but you were able to understand that swing trading was more scalable, probably takes less time, and you eventually shifted. So, how was day trading? What was that like? And then that shift to swing trading, how did you go about that?
So, I mean, I quickly realized that day trading was super time consuming. And when I was day trading, I had no concept of the higher time frame, right? So essentially the way that I would day trade would be I would wake up in the morning, I would see what news is gapping stocks, and I would just trade like the intraday volatility, buying dips, selling rips, stuff like that. It took me a while to learn how to do that, but I think based on my other skill sets and whatnot, I was able to be pretty patient and uh, and just kind of figure it out without losing, a ton of capital.
Mhm.
Um, but one thing that I realized really quick was relative to my time allocation elsewhere with the businesses that I run and the ones that I was running at the time and all of my responsibilities within those other arenas, I couldn't just be at the screens all the time. Like there's just no way. Or even if I am at the screens, I couldn't be focused on charts all the time because it's very, very time consuming. Day trading's like, PvP in a way, like you're sitting there hunting for opportunities, waiting for, relative volume alerts and news to come out. And you're just kind of sitting there lying in wait all day and you have to be ready to pounce. And I just knew that like there's no way that this is going to work for me long term. I just can't allocate that amount of time. But one of the bigger and probably yeah, absolutely the bigger reason why I knew it wasn't for me was just sheer scalability. I just had like this kind of common sense thought, and I was like, who's made the most money in the markets over time? And the top 100 participants over history weren't day traders. So I'm like, if the 100 most successful stock market speculators were not day traders during the peaks of their careers, does it make sense for me to be one at all? And I kind of weighed. There's like this. There's like it's like a thought tool. It's called a SWOT analysis. Or SWOT, strengths, weaknesses, opportunities, threats. And I use those as a mental framework for kind of thinking through problems everywhere. And it was just real quick that like the opportunity cost just wasn't there.
Yeah.
But the markets have so much liquidity. So in my mind, there's like two options: day trade or be an investor. Day trade or investor. Day trade investor. I'm like, okay, well, I know I'm going to be an investor eventually. I have to, put my money to work in the markets. Either I plop it all into like the index, or I really, kind of learn how to pick companies. Until I met Ariel, real simple Ariel Hernandez, who's an amazing all-star trader, has a similar path as me. We basically started trading at the same time. We literally started swing trading at the same time. We met in Cam the Man's room. Everybody knows him. He's an amazing person, really smart, super talented. He actually is the one who turned me on to Christian Kulamagi, the Swedish swing trader, the mall cop, who blew up 5 grand a couple of times, but eventually turned it into 100 million over a decade. Uh, and I was just like, hold on, this mall cop who, I miss him. I wish he streamed. Uh, I understand why he doesn't now. Many different reasons that I don't think are very obvious to most. But if this guy can do it, really anybody can. And I just started tuning in and listening and watching. And I would say that out of all of my education and what's shaped my framework the most, it would be him. Probably outside of just sheer, entrepreneurial pursuit and all of the lessons and systematic thinking that I've learned there, continuous improvement, et cetera. Just the raw stock market knowledge, combining those two, like Christian Kulamagi is like all I really needed. aside from like a community, to kind of bounce things off of. But yeah, I mean that's what really got me into swing trading. And I realized that like the way he trades is he does a study at night. He looks through a watch list. He then looks at the overall market health. And if the market health is conducive to the names on his watch list going higher, he will build an execution list or a trigger list. And then he sets a bunch of alerts. And literally the next day, as those alerts trigger, he executes. And what really separates him from others is his sheer ability to execute, like physically, like actually moving the mouse, like the high action accuracy per minute thing, like coming from gaming maybe or something. Sheer intellect, but yeah, I mean, it's just his focus on just purely executing and then getting off the screen. It's done. If there's nothing to do, there's nothing to do. And he literally just repeats the same process for a decade.
And what year did you start transitioning to swing trading, and what year did you find out about Qualamagi?
2021 is when it really when the thought started happening. Like I know I had the thought probably almost a year ago. Like if we were to look back into Trader Rehab's Discord chat history, like the first time I said I'm going to be an investor, I'm starting to think about investing, developing the framework for investing was like a year ago. So I would say that it was probably 8 months before January 1st, 2022, which was like the declaration. That was like actually my New Year's resolution for 2022 was to no longer be a day trader and move to swing trading. So I would say I had the realization that it had to happen early 2020. And then, well, probably I'm sorry, early 2021 is probably when I had the realization that this day trading is just not going to be sustainable. We need to move to something else.
Yeah. And so obviously 2022, what a great time to get into swing trading, was a bear market. How
Yeah.
did you handle that? Did you start to question, is swing trading going to actually work? Like, did you have those doubts, those fears? Because obviously you're starting in a bear market, and a lot of people can't weather those. So how was that? How was dealing with that?
Yeah, I mean, I literally top ticked the bull market, right? And then we went into what was it, like a 14-month kind of overall market wide drawdown. So, I mean, before I embark on any project, and like I was explaining to you offline, I need to do a lot of study. I need to really understand the mechanics of something before I decide to really invest my time, resources, effort, because I do have pretty large aspirations and I'm not getting any younger. So I can't, it's very hard for me to commit to allocating a lot of time, several months or more, to just kind of understanding whether or not something's going to work. And like, I need to be able to have a really good idea and a model to follow, whether I kind of create that framework and then have the conviction to really invest my time in it. And I did all of that just by watching Christian Kulamagi perform every day, and then just doing the math and doing all of the chart history work. I mean, what he says is completely true. The patterns that lead to the largest moves in the stock market today have repeated themselves over and over and over and over and over for ever since candlestick patterns emerged, and not just across equities markets, but across all market types. And it's because they are a reflection of human intent. At the end of the day, they're a reflection of fear and greed and human like agenda, right?
Mm-hmm.
And so there are no stock market patterns other than the Chinese scam stock rug pulls that are new. And I wouldn't even really call those patterns. I mean, there are patterns to them. I tried actually quantifying it and got pretty close, but there's nothing new. And that for me gave me the ultimate conviction, was that historical archival chart work based on answering this single question. Can you find a, single setup that has repeated itself for, 50 years that if you follow this kind of simple recipe, will allow you to deploy capital into the markets, into these technical, or into these chart shapes, in a way that's low risk and where price is likely to move away from your average quickly. And so, that's like the definition of like momentum stock, or like the like momentum trading, like what you want from like a momentum trading system, right? Like nobody wants to buy a stock and just have price chill around their average, right?
Yeah.
Like nobody wants that. And nobody wants to buy a stock and just have like, a tiny move, like, a couple of months go by and you're up 5%. Like who wants that? I'd rather just buy the index, right? And so that's what I did. And that's how I got the conviction. So I saw Kulamagi do it every day, over and over and over. And I'm like, okay, is he just like LeBron or MJ? Like, is he ever going to be emulated? But then I looked at what he was doing. And, like if you really think about it granularly, step by step from first principles, it's all systemizable. Uh, and so that's what I did. And that's what I really focused on. So in 2022, when the 10-day simple moving average is below the 20 on the daily and the weekly, and there's no setups at all. And Christian Kulamagi is also on streaming saying how terrible everything is. Well, if you were to tell me that it's raining at the beach right now, I'm probably not going to go to the beach. Like it's not a good day to go to the beach.
Yeah.
So luckily I had, a really good weatherman, and just kind of like I can look out my window and see, I can look at the market and see that it's kind of dreary out. It's not really like a good day to go out and have a barbecue. And like that kind of thought process, that framework, really I think keeps me out of trouble, and it just makes it like binary, right? It's just binary. Like I'm not going to wear a short sleeve t-shirt and some gym shorts if it's negative 10 degrees out. Like I'm just not going to, right? Like I'm gonna wear a parka.
Yeah.
I'm gonna stay inside. So yeah, that's how, and like, don't get it twisted at all. 2022 sucked. Like, the best trade I had, I think it was AGRI was running at some point. It was like a 1 day sort of pump. Um, there's a couple others speckled in there. Oh, there's another one. I think it was like AMTD, because I want to say the oil stocks were running too. But I mean, overall, the market was crap. I mean, evident by the trend in the indexes.
Yeah. And so then 2023 came around, and was that a major shift for you? Like what was your mindset in 2023? You had the start of a new bull market. I know a lot of people made some big gains in 2023. How was that for you?
I mean, 2023 was amazing. I didn't have enough, just experience through market cycles to really take advantage of the 2023 lows. Uh, but I was able to get myself into, some really amazing trades. And I mean, my biggest winners in 2023 was Carvana, CVNA, coming off the bottom. It bottomed at 355, and at 355, I believe it was 300%, 200 to 300% below the 200-day simple moving average. Uh, I mean, the stock, and I just did kind of an analysis on it, but the stock sold off 98% in less than a year, which is just insane. It went from, $300 to $3.50. And over the year, and they're very well documented, all the trades are documented in Day Trader Rehab. I traded it 7 times successfully, like 7 legitimate setups from my playbook triggered throughout the year in Carvana.
Mm-hmm.
Uh, Now, I wish that I knew what I know now about how downtrends transition into uptrends, because if I knew it then and I had the capital I had now, I probably wouldn't be sitting here doing this interview with you. I'm just kidding. I would do this interview with you, but you probably would never even known me because I would be somewhere else, I'm guessing.
Yeah.
But yeah, no, 2023 was amazing. It really just taught me the power of the markets, and it taught me the power of contrarian kind of thinking, where like the fear level of everyone at those lows was just through the roof. And it really, rung, because that's when Bitcoin bottomed. That's when Sam Bankman-Fried went to jail. Like, the markets bottomed on like the worst kind of news, right? And it really taught me that when a stock doesn't go higher, in light of the seemingly greatest news, that kind of tells you that the move's exhausted. Like there's nothing that can take it higher. And then the exact opposite's true for markets going lower. If like the worst news possible comes out and the markets don't go lower, then it's a pretty good sign of the bottom. And there's a bunch of other technical setups and nuanced chart patterns that I've picked up that, in hindsight now, after I studied, like, oh man, you missed 23 lows. Like you should be, you know, should have like your house in like Italy, like, on the beach right now, just chilling. Uh, now I know how to kind of identify those and spot those after the next big correction.
Yeah. And so, did you have any low points in 2023? Points where you just, uh, obviously it was a great market, but you did have that 3 month correction, I believe from August to October before the big run in November 2023. Was that trading that correction difficult after you had that massive run up, or were you able to just easily identify the shift in conditions?
I mean, no, I mean, none, like, none of it was like super easy to identify, even with all my archival study. Like, I spent no time, as like a greedy novice, stock market speculator studying the bad times. I studied the good times, right? And so, I think like the saving grace though is all of the other things going on in my life that keep me super busy. So I don't have the luxury of just sitting there doing things on a daily basis that don't really yield me much. Um, it's it's like, trying to mine for gold in just a random hill of dirt. If you're just gonna sit there and, just sift the dirt all day long without, really any inclination that there's gold there, I mean, it's probably not a good pursuit. And then if you just continue to do that over and over and over and over and just not yield any gold, and that the probability of gold yield is like null in that location, like, are you going to keep doing it? And, I think prior blowups in my life have taught me many lessons, and not like stock market blowups, but like just screwing up, other just things in the businesses that I've run, pursuing things that I shouldn't. I mean, as you can tell, I'm pretty binary. Like the way I think is like if it's producing, pursue it. If it's not, don't.
Yeah.
Right. And so like if I don't know, like if you dip your toe in the water and it's cold, or you dip your foot in the water, it's gonna be cold. Like how you have to just jump in? Like you literally have to jump in to understand that the water is extremely cold. Like I don't think you need to. Like you can just kind of put your hand in. Like nobody ever like, oh, is the pool warm? How's the pool? How's the water? Like nobody like just like dives in like it's great. Like I mean,
Yeah.
some do, but most people just kind of put their hand in or their toe, right?
Yeah.
Like it's just common sense for me.
Hmm.
And I just think I'm really, blessed there. And like, don't get it twisted. Like there's been serious drawdowns and serious fumbles and blunder on blunder. Like I can't tell you how many insane mistakes I've made.
Hmm.
Uh, but I think just the overall framework will always keep me alive. And it's this. Look, like if trading was all that I had, I don't know. I don't know what I would be like. It probably wouldn't be good. I think that a large part of my edge is that I'm needed elsewhere all the time. And it just keeps me off the screens. I had to develop a system that allows me to execute, take advantage of the high liquidity opportunities, the big momentous opportunities, and be out. Because like, what else do you got to do? Why do you have to sit there all day,
Yeah.
right? And I think the people that sit there all day with their hands on the mouse, they're the ones who get cooked.
Yeah. Yep. Completely. And so I know you mentioned Qualamagi was a large part of your system, but obviously a lot of people, there's a lot of great traders and a lot of people to learn from. Some would say there's information overload. So can you talk about maybe the nuances of how your system was developed and how you went about building that? the core principles. I know you're a big system guy. Everything you do is, revolves around a system. You build it out. And so, can you talk about maybe the thought process and really the nuance of how you built your specific system, and how trading for PeopleWish?
Yeah, so I mean, it was all about just the concept that the same patterns repeat themselves over and over and over and over, and like that really stuck with me. And I'm like, okay, this guy said it. He's successful. Uh, what does that mean? I need to go back and actually validate it, right? And so I went back through. I like set up a scan, uh, just looking for high liquidity, high momentum names, and I just went back through all of them, like thousands of not just like stocks, but like thousands of moments in time.
Mm-hmm.
And I just looked at the conditions where stocks made the biggest moves, and not just the biggest moves, but big linear moves. And I'm like, okay, there's all sorts of like different variations of this, but they all kind of follow the same progression where they come out of a downtrend. They, on big volume or news, whether it's earnings or just some sort of catalyst or something, right? Like there's some significant news event that changes the trajectory from bad to good.
Mm-hmm.
And then a lot of volume comes in, a lot of upside comes in, and then the move digests. People figure out, or they're think like what I think about is like a collective market consciousness. I kind of think about Mr. Market in the way that Graham talked about. But like the thing doesn't sell off. It forms like a nice bull flag or a high tight flag. It gets tight, as Qualabaggy always preach. Big move up, pull back, undercut, reclaim, surf, higher lows, get tight. And then there's a very clear, obvious range, and then the stock breaks out and it runs, and then you just trail a moving average. And that was basically the first setup that I really, really, really focused on. And any other setup that I've added to my playbook that's long, for the most part, is just a variation of that same idea,
Yeah.
where stock exhibits momentum and interest due to some sort of large game-changing catalyst, and then you just try to pinpoint a low-risk entry. Uh, and essentially, yeah, I mean, it's that. So that was like how I really thought about it in the beginning. Because like if your mission is to make money in the markets and you don't have a lot of time to allocate on a daily basis to it, you need to think over and over and over about, until you figure it out, what is what are, like, especially from technical analysis, and you're looking for a specific pattern, what's a pattern that is prolific, that shows itself a lot, that leads to giant moves, right? And then like if you just try to answer that question, you'll come up with the same conclusions.
Yeah. And so that all, it sounds very simple, but most people can't do that. And, a lot of people, like, you have those core principles, but you tell someone that, and, they'll give you charts that just look nothing like those principles, or, it follows some of the criteria, but not all of it. Do you have any one thing that you think made a big difference for, like, really understanding that setup or that move? Like, can you pinpoint it to one thing that, like, can make a big difference?
Um, like why I would, well, I mean, so it's really like you have to define what you want, right?
Mm,
Like I want like I want to go to the beach, right? And I want to chill. I mean, I really don't, but this is like the analogy. All right, let's say I want to go skiing. Okay, just because it's winter out, it doesn't mean the conditions to go skiing are good.
right.
How's the snow? Right? Like, is there a lot of snow? Or okay, great, it's winter, there's a lot of snow, but it's the week before Christmas. Is that really a good time to go skiing? So it's like there's other things there other than momentum and liquidity and a big trend that makes sense, right? Like I don't want to sit there and be heartburned. I don't want to have heartburn over my position, right? So it's like what setups check all of the boxes. Like in a perfect world, what do I want, right? I want a stock that is very liquid so I can deploy good amount of capital. I want a stock that makes big moves, so it has a history of making big moves.
Mm-hmm.
And then I want a stock that is clean and orderly. I don't want it to be choppy. I don't want to like, buy a breakout, be up 10%, and then the next day I'm up 2%, right? And then the next day I'm up 6%, and then the next day I'm back to break even.
Yeah.
Even though it's trending up. Like that's like I'm not very interested in that.
Yeah.
And so, like just by like like the markets are so attractive because they give you the like idea that making money in them is easy. You just buy stocks that are going up.
Yeah.
And it can, I mean, like for really talented or I think well thought, stock market speculators, it can be easier, right? But it's extremely difficult for everybody. So like knowing that it is extremely difficult, how do you just lighten that slightly? Like, how do you just lighten it slightly? Like, how do you make it like slightly less extremely difficult so that it's tolerable, right? Because most people trading stocks, especially from like a technical perspective, like it is not tolerable. Most people quit very quickly. Like for most people don't trade for more than just a few months, let alone a year, let alone 5 years, let alone a decade, let alone a career, right? Like they just don't. And there's all sorts of reasons for that. But, like it was, to answer your question, it was what do I want? What do I want? How does it fit, just my personal context? And does that ideal scenario actually exist in the markets? And so I basically created an avatar of what I want, and then I went and looked and was it there? And like I already kind of knew just because I saw Christian trade and like I'm already in the markets, like I already see stocks making giant moves. But like also being able to have the conviction to just from a technical pattern alone to like hold a stock overnight. Like that was a big deal. Transitioning from day trading to swing trading was just, like, oh my God, you hold any like yes, from where I came day trade or where I came from day trading, the stocks that we were trading weren't like they're more than likely they were going to be at the same price that they were at, a week prior to the move or lower a couple days later, right? Like there's not a lot of staying power. It's not like, a new giant company was born out of this like move, right? Like they're like bio pumps or like, whatever like kind of crappy business theme is hot right now, right? And like, it was really getting over that too. So it's like, how do you gain conviction that like in the idea that like, oh, the stock isn't just gonna like drop an offering tomorrow or like, whatever it may be. Like how are you just not gonna get wrecked? Like how most day traders get wrecked in these kind of pump and dump sort of stocks. But yeah, it was really just kind of it was first like, what do you want? And then does it even exist? And if it does exist, is it attainable? And Christian Kulamagi kind of showed the way there. Pradeep showed the way. I mean, even Dan Zanger, and at the time, having Ariel and a few other people kind of transitioning from day trading to swing trading, we're all having these same kind of ideas and epiphanies, and we're all seeing it. Um, so yeah, I mean, I don't know if that answers your question fully, but it's really just having an idea of what you want. I mean, other than just like make money. Like, no, it's like you have to consider like make money where your mental health is okay and like you can allocate the time, etc. Right? So like just thinking about it a little bit, I think helps. Yeah.
Yeah. And so for your the first setup you traded, like what would you name that setup? Was it a high type flag, big base breakout? I don't want to put words in your mouth. I know Kualamagi would say, just a flag or a high type flag. What would you define it as?
Yeah, I mean, it wouldn't be. It's not really like a high type flag. Like, I don't agree with him. Now that I've studied the market so much, I don't agree with everything he's ever said.
Yeah.
I mean, I agree with the vast majority, but um, I would say that it's kind of like that first bull flag sort of setup.
Yep.
After a correction, coming out of a correction, like a big leg up, and then it's like a 20 to 40 bar consolidation with a couple higher lows. It allows the 50-day moving average to catch up, so you have the 10, 20, and 50 kind of all lined up. If you were to look back 60 days, the stock is probably up anywhere from 50 to 100%. Liquidity profile is probably, I mean, it's well over 100 million. The daily average range is well over 7. Like that's like the bread and butter. Like that. Those are the stocks that have made me the most portfolio gain on a percentage basis. So like good examples would be SMCI, that very large base that it broke out of. MSTR is another one. Nvidia or NVDL is another one. I mean, there's a ton of them, really, but I mean, those are like some that like really stand out.
Yeah, and we'll go through those later. But was there anything? So when you first started trading the setup, obviously you've grown a lot within your whole trading career. But so when you first started trading this setup and you first started swing trading, did you have anything that you ended up removing from what you first started doing that didn't matter? That you did a lot of early in that your swing trading career?
That's a really good question, Ashton. Like, what did I stop doing so much? I mean, it was like in the beginning, listening, to other day traders was one thing that I stopped doing, especially not like-minded people. So, like, in the very beginning, I had no idea what I was doing, so I had to kind of listen to everybody and use my own filter and my own judgment of just, if people know like what they're talking about or not. Like, you don't have to see somebody's career P&L. You don't have to like, see their Bugattis. Like, you don't have to see their fancy life or they're like randomly handpicked trades or cherry pick trades to like know they're a good participator. Like all you have to do is just have a conversation with them, and if you have a decent filter in your head, it's very easy to suss out whether or not somebody knows what they're talking about. And then all you got to do is just go back and validate what they're saying. um, and so I mean that was like one of the big things. And yeah, it was kind of like cutting out noise in that regard and just focusing on where I've seen people actually be successful. I mean, there's day traders shorting, right? Making a ton of money shorting. Well, I don't have Thinkorswim. I'm sorry, I don't have other brokerages. I just traded on Thinkorswim. I wasn't that interested in shorting small caps. I didn't really have the time. So that would be an example of me seeing something that worked really well for people, but it wasn't feasible for me to actually do, right?
Mm-hmm.
And so it was like just kind of really committing to cutting out noise and focusing on the one mechanism, couple mechanisms, the general framework of swing trading that I saw make money with like not a lot of time. Like it was just super, it just clicked. It was just super attractive. And like me, I just kind of obsess over things until either I get bored of them or they're just kind of become a routine. And that was like, just learning these patterns. So one big thing that I did always in the beginning, and this came from swing or day trading, was just buying within ranges. Like I would just always buy within ranges. Like I saw the setup. Basically, I'd always be early.
Mm-hmm.
And it was like, I think I'm gonna miss out, or like yeah, I mean, really, I think that's it. Or I'm just like impulsive. Like it's there. I'm excited. Like let's get long. Let's get long. And a lot of times, the majority of the times, the stock would end up going higher. But I would buy it and then get chopped out because it actually didn't break my line. And that was just like a huge thing for me. There's a difference between intentionally buying the bottom of a range, intentionally doing so, and just like premeditated buying within a range, thinking that it's just going to break out with size. Like you're just going to get, chopped to hell. So that was like a really big thing. And it's like easy to say, like, don't buy within a range. And there was certain like techniques that I've developed to really like prevent me from doing it. But it's much harder. It's easier to say, harder to not do. Especially if you're sitting there in front of the screens all day. It's like, it's there, it's there, it's there.
Yeah.
And you just like buy a couple of inches below the line, you just get stuffed. Um, it's happened to me more than I'd like to admit. But yeah, I mean that was like one of the big things that I had to stop doing. Another was, like trying to learn how to short, which I don't know if this is the right place, but um, not being very specific about the criteria that trigger a short entry and just trying to pick tops just because I think something is extended. I give X so much money doing that. So much money. And you think you got the top, or you do nail the local top, whether it's the day or whatever, just to get stopped out a couple of days later. Um, yeah, that was a lot. Yeah, I set a lot of money on fire that way.
Yeah. And so for your main setup on the long side, are you able to distinguish A setups from B setups? A lot of day traders, they have their A setup, their B setup, their C setup, kind of like in poker, pocket aces, Do you have that in swing trading, or are you kind of just there's edge in what you're trading, and so you're just gonna trade it the same size no matter what? Or do you have those A B setups, and are you sizing differently on those?
I mean, up until recently, I just always buy the position with one click.
Mm-hmm.
Uh, you know, where like I'm a chronic over trader, even though I don't, you know, like even though I try to just trade just what's on my focus list and what triggers, like I would say that I overtrade still. But my system kind of it's a numbers game, right? So, if the system, produces a 33% win rate on average, well, the more legitimate opportunities that trigger that you can deploy capital in, the better, right?
Mm-hmm.
But there's just sometimes that they don't, they're not A plus, like in terms of how I've defined some setups. And so like I may take slightly less size in those instances where it's like I just don't feel super confident. Like there's just the times that where like you're legitimately excited, like you can't even hold it. Like those are the true 5-star charts where the chart just looks so good to me based on all of my study that the probability of it leading to an amazing move. Like you've seen me, in the chat, like in day trade rehab or whatever. Like there's times where I just get obsessed over certain tickers, and like there's like a joke. It's like the more I mention a certain ticker, the better the setup is, and
Yeah.
the likelihood it's going to go up. And it's all there. I'm just not making this up. Like, that's the beauty of that place is all the chat is saved. You can look at it all. But yeah, I mean, I think that is probably a major. I don't know how to explain it, and it may be the fact that I've just looked at so many charts in a very narrow context, where my narrow context was study all of the conditions prior to really big, high volume, clean moves. So find as many examples as you possibly can. I mean, the best one I've ever seen in my career it happened this year. I mean, it's like one of the cleanest moves I've ever seen, and it just fits every like thing that I look for just from a technical perspective to a T. Like it is a true 5-star chart pattern, and there's a bunch of examples of it. But like, what are the conditions that make it 5-star overall? It was just how well it treated traders essentially. Like how low stress was the move. So like if the stress like if it's a really big move on volume and it's really low stress, like that's like the perfect story, and it has duration. Like that's what you want, right? You just want to click the button and the thing just runs away, right? And so like what are the conditions? What are the that that have to happen, or that what are the conditions that are most common um, for stocks before that happens, like historically, right? And it's like, does the stock have a history of like making big, clean, linear moves? Like, what, like if the stock has a history of making really choppy, like insane, like the chart looks like an EKG, like type of moves, even though it's made a big move up recently and it's flagging like these big choppy bars, I'm not nearly as interested in it because of its history. Once it changes its character and shows me that it can trend cleanly, I may get interested, but there's so many more fish in the sea. Just because it's like, I don't know, it's like like I said, like just because it's summertime and it's hot out doesn't mean you want to go to the beach, right? Like just wait for the times that it's perfect for you, what you like best, your best beach going conditions.
Yeah. And so you mentioned prior that you are an overtrader. A lot of us are.
Yeah.
And do you think that there is a reason for that? Like essentially, um, like what do you think causes that? Is it just staring at the screens all day, or like was there ever a point in time where it was hard for you to distinguish if something was a legitimate setup or not? I know I struggled with that in my career. Did you ever have that happen to you? Like, did you always know a setup was a setup, or did sometimes you think a setup may have been a setup, but you didn't really know? Does that make sense?
Yeah, I mean, I didn't really have like for me the pattern recognition. I approach trading, I think, a lot differently than most in the beginning, from a very structural perspective. From a let's look and see what's worked in the past. Does it does it meet like your just abilities? Like, are you able to reproduce it? Okay, great. Let's try. Right.
Mm-hmm.
The real issue though was just like the kind of overconfidence, thinking that it was that easy and not understanding the other market dynamics, like a market filter, for example, or like chart theme. Like just because you see a really nice setup, like it's a beautiful setup, right? But there's no other charts in the market that look like it. It's random, right? And I didn't understand that. And that just took a lot of experience. So now like chart theme is really really important for me from a technical analysis perspective, um, and that can keep you out a lot of trouble. Uh, but yeah, I mean it's difficult, and I think just time in the markets will really help you flesh out those nuances. Because what I may see as a high tight flag, or if like when I say clean, like it's a clean linear move, what does that actually look like? Like what does that actually mean? Like, oh, like you understand generally what the word clean means. It means not dirty. And like linear, you know what it means? It means like not non-linear, like in a straight line. Like
Yeah.
it's right. And so like, but like, what does it actually mean in the context of candlesticks within the stock like market? Like, what does clean mean relative to not clean? And I think it's really doing the chart work and figuring that out. Now I can just spoon feed it people because I've done the work and I've made all the mistakes and I've really kind of figured that part out. And then it's having a market filter on top of it all. So just because you see um, a clean setup uh, in the wrong environment, it's not going to really yield you too well. So it's like for me, setups, all they are just mechanisms to get money into the market, low risk, at spots where the price is going to move away from your average quickly. That's it. And there's all sorts of different setups, just like there's all sorts of different tools that you'll use for different jobs, just like you'll use for different instances in the stock market. Like where are you in the progression of the stock market itself? Like what stage are you in, right? Like
Mm-hmm.
stage analysis, sort of thing. And there's times when to know to use a hammer. There's times when to know to use a mallet. When do you use a jigsaw? When do you use a circular saw? Right? Like these things, like they all kind of do the same thing, like right? But like what jobs do you use them for? And that like comes from experience, right? And experimenting for your own and figuring it out. But like there's environments where double top short sales work and they're prolific. They're very, very rare. Like at like I would say like April 2022, they worked really, really well. Now they present themselves, but they have really mixed success. Like they're not a really high probability um, um, entry, like setup for like a long, like a company's that's going to break down, right? Like right now, the chart theme would be what we saw in the past couple of weeks was everything was undercut and rallying previous base highs and left side peaks, so significant uh, support and resistance level that got lost, and then we blasted back through it. And it wasn't just like a one-off, it was all of the stocks that are desirable were all doing it, regardless of what the business actually does.
Yeah.
Yeah, so it's having that awareness, knowing when to use the tool at what stage of the market. And like the good thing though is high tight flags don't really happen in bear markets. So you don't really have to worry about like, oh, I'm going to trade high tight flags in bear markets. Like what setups are in bear markets? You're just trying to catch bottoms, basically. Like it's kind of a hard game. Or what works a lot better in downtrending markets is shorting against declining moving averages, right? Like that's like a much better strategy, and it's just kind of understanding where you are in that cycle. And you're never going to understand that like we're in a bear market a couple of weeks in, right? Like 99% of the time it's like, you're down 20% and then we call it a bear market, right? So I think that's where chart theme can kind of help you, because if a lot of if the majority of, say the hot stocks are, really selling off, we can probably kind of come to some sort of conclusion that the powers that be are causing that. It's not like retail selling off the market, right?
Yeah.
Um, yeah.
And so, okay, so I want to talk about, before we go into maybe a winning trade breakdown and losing trade breakdown, I want to talk about your risk and position sizing. I know you actually did a chart talk about this a few weeks ago. If anybody watching this hasn't watched that, highly recommend you watch that, because you do have a bit of a different perspective than most traders. So can you talk about how you determine risk per trade? I know you say a lot, you speak percentanese. So yeah, can you talk about that?
I mean, I think it's relative to everybody. Everybody has different risk tolerances and different aspirations and different timelines. Um, so, I mean, in what
How
context,
how does
really?
how does PeopleWish determine his risk per trade?
Me?
Yes.
Um, I mean, I don't really think like that. I think like from where I am, like okay, if we're just talking from like sheer technical analysis perspective, the risk come like all right, just to keep it simple, I don't really invest more than 10% in portfolio per trade.
Yeah.
Right? Like that's I mean just keeping it simple.
Do you
Um
sorry,
yeah.
do you use progressive exposure? Um,
No, no, I don't agree with the concept of progressive exposure. It doesn't really fit into my system. It's either there's either the conditions are true, market conditions are true, which is the gate, which says you can go to the beach, it's summertime. Okay, if it's summertime, right? And if the length and quality of my watch list is good, meaning there's chart theme, there's stocks breaking out and going higher, uh, then I just look for the setups that are within my playbook. I draw the lines, I set the alerts, and I execute. I mean, that's kind of where it is now. Um,
so
yeah.
you're not going into a trade thinking I'm going to risk 1% of my portfolio. You're not thinking like that.
No, no, no. I don't have to think that way because if my if my position size capped at 10%, right?
Hmm.
And if I'm only trading tight charts, meaning I'm getting entries, uh, the goal is to get entries as close to the level that I would stop out at. So like the level that the technical setup is no longer valid, right? Like it's broken, right? Like if it's below this line, it's bad. If it's above it, it's good, right? So like if you have like a very narrow, that's why you trade tight charts, because if the chart is extremely tight, like a VCP, like Mark Minervini talks about, and it's a wedge or whatever it may be, like if that pattern is formed and it's really tight and you were to buy a breakout, well, where is the logical spot that the pattern's invalidated, right? It's not like, oh, it comes back and it goes below your line. No, it's like the bottom of the base. Or if you're shorting something, it's like new highs, like you are invalidated, right? And
Hmm.
like, so that's where your stop is. And the trick is don't use like a large position size when the distance from your entry is far away from the point where it's invalidated, i.e., a wide and loose range, right? Because then you're just more than likely buying within a formation that hasn't finished consolidating. And that's why you buy tight charts. And so you don't really have to like quantify risk in that regard, because the most you could ever possibly lose is like 1% of your account. And on a 10% position, that would be a 10% drawdown in that stock on that day, which is just insane, right? Which is just insane. So you're chasing, if that's happening to you, you're chasing, you're using too much size. The thing isn't, done forming. There's not a clear defined range. That's why, buying within ranges is just not advisable. But I mean, obviously though, I'm not gonna like, let, if I had a 10%, say I had a 10% position, right? And I caught a monster, and that 10% position ballooned into a 30% of my account, right? And then that stock had a bad news event overnight. Like, I'm cutting it. Like if it's dumping 10%, 20%, I won't allow, and this has happened to me more times than I'd like to admit, more than 50% of my gain come back on me, like meaningful gain. Like if it's like day 5 after a breakout and I'm up 10% or something, like most of the time, like if it's coming back and stopping me out, the whole thing comes back and stops me out. But like if I'm in a breakout and it's been a month and I'm up 50 or 60%, I'll be damned if I'm letting all of it come back on me. But that's what moving averages are for. So I'll trail moving averages, price closes below it. But like on day one risk, it's like my risk is so tight. Like my stops, you see them, I show them. It's like, a penny below low of day. And low of day, typically in that instance, if I didn't blunder it or buy when I shouldn't have, like just below that, the setup, the stock is just breaking down. It's no longer a long, it's probably a short at that point. Or at the best case, middle case scenario, it still needs more sideways, right? Like I just got stuffed and it's back in the range chopping around sort of thing, which happens.
Is
Um, yeah.
is there any are there any times where you come in buying a stock and you set your stop at low a day and it takes out your low a day, or it gets close to low a day and you adjust the stop and you say, well, actually I want to give it more room, or maybe you even average down into it? Are there times where that happens?
So yeah, it used to happen all the time where I would just like like I would I would override my rules, and I would usually pay for it. And then I kind of had the epiphany of this new concept, for me at least. It's not set your stop at low a day. Really, what you should do is, well, at least for me, this is Alec talking to myself. I'm not giving like investment advice here, but it's
Yeah.
really what Alec should do is set your stop at the nearest um, relevant daily level that is less than a 1% account drawdown if you were to get stopped out. So what does that mean? Okay, so say I were to enter a breakout and low of day would equal a 5% or a 0.5% account drawdown. But just below low of day, if I were to give it another 1/4%, you have the 10-day SMA, which is the true support there. Like price popped up, like I'm looking at the daily chart, it popped up, it's surfing the 10, it breaks out, it cracks low a day just to wick off the 10, rip higher, and actually break out. I took it off my screens, I went to go do something else, I got stopped out, I missed the move. So now, taking slightly less size and using the logical daily level as opposed to just like, there's often times where low of day doesn't really define the range. Yes, it's the daily range, but it's not the most important range boundary. It's not what price is respecting the most. And so what I thought about was, really taking a step back and identifying what is the range, whether it's a static line or whether it's a dynamic trend line. What is the range that price is expect or respecting the most? That is the invalidation point. And sometimes though, I'll get stopped out at the low or wherever, and just because I don't want to let it go all the way down to that level, that 10-day or 5-day or whatever it may be, and I'll just watch it for like an undercut and reclaim and rip on the intraday through that. Uh, but that's never like my choice number one. I want to buy that, 5 minute orb that just rips and just doesn't look back.
Mhm.
But so often that 5 minute orb gets cracked, or so often instead of breaking out, it just goes straight down, it washes out, and then you can I what sucks the most is when a stock fake breaks intraday, stops you out, washes out, reclaims, and rips. There's nothing worse.
Yeah.
Uh, so, and then there's also nothing worse when the stock washes out, you buy a perfect intraday UNR of that key level, breaks out, and fails. Like, that's just trading. Like, that's going to happen a lot,
Mhm.
right? And, I guess what kind of helps me think through that is just overall win rate of swing traders, not just mine, but other successful swing traders, where it's like a numbers game. Like, just because you get pocket aces doesn't mean that you're going to win the hand. So often pocket aces get cracked.
Mhm.
Doesn't even matter. You could play them better than, perfectly and still get cracked.
Yeah. And so a lot of people struggle with this. So your first goal is to buy that 5 minute opening range break in for it to rip, but sometimes that doesn't happen. How do you determine if a stock is worthy enough to rebuy it? Like, and how many tries do you give it? How do you determine that? Is it just feel?
So like, it's a perfect setup. You have your line set properly. You buy it perfectly through the line, and then it just stuffs. Is that what you're talking about?
Yeah, you buy the 5 minute opening range break, it stuffs.
Yep. I mean, that happens all the time. That happens.
Mhm.
And, what you have to understand is that range is expanding. So you have to go back. If your line, so there's two things. Either you legitimately bought a failed breakout and that range has now expanded and the line that you had drawn is no longer valid. It's no longer the respected upper boundary. That's one, which is usually not the case. Or two, you just bought early and the range wasn't well defined enough in the first place. So, but let's just assume that it's actually one. And it was a perfect chart. Everybody agrees. You come to me, I say, I thought it was perfect. Everybody thinks it's perfect. It's truly a beautiful chart. Sometimes they just get stuffed. What I do is um, I will immediately redraw my line. If the setup's I will zoom out. I will get because I execute on the intraday time frame. So in the morning, I have my like daily levels drawn. I'm just focused on that price action. I'm day trading my entry. I'm swing trading, everything else. And which is something that somebody said recently that kind of stuck with me. May have even been Ariel or Nick. But if the chart is still valid and the thing just didn't die, well, you just like if your opportunity set is defined by a certain list of criteria, if that list of criteria is still true, the setup is still valid. And if it triggered that line again, which happens often,
Yeah,
then you buy it again.
gotcha.
And it's not so much how many times do you buy it before you give up. It's is it truly still valid? Yes or no?
Hmm.
Like should you like is it should you even be trading it? Is it just actually a choppy POS that shouldn't even be on your watch list? Right? Like you have to level with yourself and truly look at the conditions that much must be true for you to go to the beach and enjoy yourself.
Yeah, yeah. So great, thank you. So now I want to get into maybe you screen share and we do a winning trade breakdown. I know you talked about Carvana 2023, Nvidia, SMCI, MSTR. Do you want to go through those charts and maybe show us what you were thinking during those times, how you bought those, how you sold those?
I mean, yeah, we can talk about a few of those. I'm trying to think of other ones that I haven't talked about a lot recently. It's like one of those things that like when you put on the spot, you can't think of them.
Yeah.
Um, just at the I mean, Quantum was a good one this year. Open obviously was a good one. Actually, it hasn't been that good. The trade was actually better short for me for that first parabolic rip, and I missed the 250 entry. Um, I should have thought about this a little bit more before we hopped on. But yeah, I mean, we can go over some stuff. So you just want me to
Screen
share
share,
my screen?
please.
Okie doke. All right.
Perfect.
So, all right. So I am kind of at a different spot in my career. So like there's different trades that there's different trades that I'm taking right now that probably don't make sense to a lot of people. They're more so like hybrid investments. I'm also getting used to learning how to use this. I got okay.
There we go.
So let's look at some stuff from this year. Let's look at Hood. Hood was a big one for me.
Yeah.
Um, I should probably restart TradingView. It's kind of laggy. So Hood was almost a revenge trade, not in so much the like traditional sense of where, you trade something over and over and over because like it's like revenge, like for getting stopped out and stock taking your money. It was more so revenge against the market. Even though I believe in Vlad, this trade happened before my epiphany that I'm going to be investing in people and their ability to bring ideas to reality, and not so much like business ideas. And that's just for another topic. Just my kind of transition into becoming more of an investor. I guess you could call it, owner of businesses. But yeah, I mean, April lows was a big miss for me. I pretty much missed everything. And this was a chart theme that I was not really familiar with. But essentially, we had this giant rip. It's like all year rip. And then we have Trump's, tariff announcement, and the market cracks, right? And everything pretty much undercut this left side peak. I mean, this was like Oklo was making its really big original move. What else was making like Hims had that really big parabolic move, which was one of my best winners of the year.
Mm-hmm.
And then they all kind of moved out of these like left side bases that had these pretty pronounced peaks. And then after the tariff announcements, everything cracked. I mean, we had a 30% sell off roughly, just in I mean what felt like a few weeks. And I never really experienced anything like that. Like I think the COVID crash was the most similar, and that happened just before I started trading. So real time, I still thought that the market was very extended. So I failed to just kind of like realize this undercut and rally setup. And if you go back, I'm going to remove this line. If you go back, you'll see that the vast majority of stocks that went way higher, whoops, made this pattern. So it made an initial leg down, it pops up, it undercuts it, it reclaims, made a flag, and then it ran a lot higher. I mean, name a stock that went 200% after April lows, and it followed this pattern for the most part.
Mm-hmm.
I mean, from like CRDO to SoFi to Hood, Palantir. I mean, pretty much everything followed this chart theme, or more of a chart theme like Reddit and Alab did, which were they sold off a lot more and then they formed more of a flag before they ended up running. So it was kind of like a delayed undercut and rally. But this was like my big miss. It turned into a really great trade. Not so much Hood, but missing April lows because I should have recognized this chart pattern. I just didn't really have much familiarity with it. Now I see it. But yeah, Hood was a great one for me. It's not like the cleanest, but it still was good enough of a trender for me. When I was trading, like a smaller account, I would take bigger position size. So I really want to make sure that the stock had a history of trending really clean.
Mm-hmm.
But now it's like if I look at Hood's chart history, like it trends clean enough for me.
Yeah.
Where it respects the 20 really well. So essentially what I bought here was it's just a variant of the first flag. Let me get back. So you had a big sell-off, a clean downtrend, that was broken, kind of like a first range,
Mhm.
and then price makes a big move up and it forms a little flag, and I bought it right here at like, I don't know, mid 40s essentially. I think I bought it this day.
Mhm.
Uh, and I sold the majority of my position here. Uh, and then we still have some of the family accounts that I don't really ever want to sell. So that was one. SoFi was very similar to it, where it also had this. Actually, it's kind of even a more defined downtrend. So, one thing we haven't really touched on yet, I keep the MACD on all of my charts. I use it for kind of a momentum. I use it to help me see when momentum is changing. So like you still see a pretty pronounced downtrend here on the daily, but yet, so like the daily made a lower low, but the MACD made a higher low. That's called a bull divergence. And it doesn't mean just like buy the stock, but it means that momentum to the downside is easing. Uh, and if you also go back and look at all of the April lows stocks that ran, like SoFi, Hood, all of them,
Mhm.
Palantir, etc., they all had this MACD pattern. So it's still it's the same pattern, it's the same chart theme where it made that big leg lower, it undercut it, it reclaimed, made a big move up, and then it flags right here. Oops, sorry. So it put this like really tight flag in, and I don't know, I think I bought it around 15. I think I actually have slightly lower than 15 average. I can pull it up. Um, but yeah, I mean, and then it was off the races. Like this, I would consider chaos, not linear, extremely choppy.
Mhm.
But where I bought it, it was very linear.
Yeah.
And recently, it had a history of making a really big linear move. Like this was a no stress big move up,
Yeah.
right? I mean, it ran 100% in I don't know how many days, like a month or so, like 2 months.
Yeah.
Which is like, a dream, right?
Yeah.
With very little headache, except for that one day. That one day kind of stunk, but that was an earnings reaction day. But ever since it's gotten, ever since I entered, at least the majority of the trend, it's starting to get really, really, really choppy, which is kind of indicative of a top. Um, so we'll see how long we're in SoFi for. They actually had an offering the other day. Let me think of some other ones. CoreWeave was a really good one. There's actually a couple of good trades on CoreWeave. So like the best, one of the best kind of momentum bursty sort of trades was right here when it found support on the 5 day or the 10 day, and it put in a really tight day, and then it gapped up.
Mhm.
I mean, and then it put in another really tight day, like this high tight flag, and
Yeah.
then like this was a really big candle, but that was like a really quick momentum burst, but it was a legitimate setup. I mean, it went up, I think it was like 20 or 30% a couple of days. I mean, these aren't like the biggest, but it's one that some that I'm thinking about the top of my head. I actually had CoreWeave really low, but I don't know what it was. I psyched myself out on earnings and I sold most of it. I played a couple other little setups here. This was a good one. Just one thing I love about CoreWeave, and I'm long now, as of like maybe a week or so ago, is just how linear the moves are. It just made such a big move, and the majority of the move is above the 10 day simple moving average. There are really no like great technical setups here, but this one was a pretty decent one. Is an undercut and rally of this high volume close. It's a little bit more of an advanced and hard to spot setup. Um, AEVA was probably the prettiest, most linear setup of the year, and it kind of and maybe like ever. And it really meets everything that I look for. If I can zoom in here and kind of get it all figured out. Uh, where you had a real clean, pronounced downtrend. There was a big news event uh, that caused an ignition candle. That was earnings. And so it broke this downtrend on really big volume. Let me adjust these settings really quick. market's like here. So yeah, like you can see like volume broke out. There's a MACD cross, 620 MACD cross on the daily. So this is like a significant trend change on a big news event. And then it just put in like probably the most beautiful like first bull flag, maybe like ever. Like it's up there. And that first leg up, that first move up was just, a dream. Like price didn't even close below the 5-day simple moving average. And then it goes sideways for, roughly 30 bars, gives you a really tight day and then expands, right? And then look at the move. I mean, the move was just insane, right?
Yeah.
So like this to me is like bread and butter, like what you can look for. And there's a lot of these this year. Coin, a much larger liquidity name, it did something very similar. It didn't run as far, but it still gave a really really awesome expansion candle. It's essentially the exact same setup. So you have like this downtrend, this big expansion candle out of the range. It then flags. It builds a really easy to spot trend. It puts in a really tight day, and then it expands, right? With the market tailwinds. And then it made an awesome move in just a few days. I mean, this is like the epitome of momentum swing trading, momentum burst. I mean, obviously you'd want it to go much higher, but still, I mean, for this size of a company and the amount of dollar volume that's going on, the 70% move in just a few weeks is like a dream. Another one,
Question.
bit. Oops.
On these trades, so on the hood and the SoFi and
Yeah. If you want to stop at any of them, stop. Yeah, we can
yeah.
stop.
So are you entering these on 5-minute opening range breaks? Is that the entry tactic for these?
Yeah. I mean, the ones that I'm showing you right now, I mean, that's basically it.
Okay.
Yeah. That's basically the entry tactic.
Yep.
I mean, there may be some exceptions where price gapped up over the range, and then like its first move in the morning is to fake everybody out and wash out, and then bounce off like a simple moving average, so like QBTS, which is one that unfortunately I got stopped out on right here. It was their earnings day. Sucks because I had a really nice position in it. I did not get to enjoy this one, but this is a really good example where earnings broke this range 8, which I do believe is also there's like a really dominant left side peak from prior year over here. It was like the last like 3 or 4 year high, which coincided perfectly. And in the morning we gapped up due to earnings, and the first thing it does in the morning is washes out right into this 5-day, and it stopped me up. And then, I had to go use the bathroom or sneeze or look at something else, and I missed it. And this was probably one of the biggest misses. And it didn't really run for that long, but this move, like, they don't have to run that long. I mean, it was up 130% in like 2 weeks, right? Like, that's like, I'm more than happy with that. However, I did catch the next leg, not in QBTS, but in IONQ, where it essentially made a really big move up. It pulled back. It like built this range. It broke it, and then it built this long flag. And all of quantum was basically flagging the same way. It popped up on elevated volume. It put in a tight day, and then it took off. But this was a short duration trade. But still, though, it went roughly 50% in just a week or so.
Yeah.
A little bit over a week. So did we do bid F? Let's do.
Maybe we could do MSTR or Carvana.
We can do Carvana from the low CVN. I don't really want to talk about it this year because I've tried to short it like 10 times and it just hasn't worked.
Yeah.
Even though I've got myself in pretty good spots, it just wrecked me. I'd love to see how much I'm actually down on it this year overall. But 2023 was awesome.
Yeah.
2023 is really the lows. It's really where I discovered what I call the divergence pivot, where you just have like a mega downtrend,
Mm-hmm.
in price, but you have a really strong uptrend in the MACD. And it's kind of like when the price and the MACD sort of coincide and the downtrend gets broke. And that's like the pivot. And then now it starts a new uptrend. But let's see. Okay. So this was the first time I made money on Carvana long. This was the first trade. So it made a big move up and then it just formed this really tight flag. Like that's all I would look for. And you know, I've repeated it for as long as I've known you. Big move up on volume, pull back, undercut, reclaim, get tight, expand. And then how clean does it do it? Like that's like a good setup for me, a good technical setup. And so this one did it really well. And just in a few days, it moved, from what, $7 to 20. Open did the same thing at the same time, except Open ended up going much lower. It's gonna take me forever to get back there. I think it's right here. Yeah. Yeah. Open actually ended up going like, sub a buck, as everybody knows, but it did the same thing. Basically at the same time as Carvana, where just had this mega, forever downtrend,
Mm-hmm.
and then the uptrend on the MACD. You had this breakout here where it kind of legged up and then it went sideways and then it proceeded to go up another 100% or so. Oh, there's a better view of it. Sorry, I'm still just getting used to learning how to use Trader View better. But yeah, like here's the big downtrend that breaks. It forms a first flag, like a real nice tight flag here. A real nice inside day. It reclaims the 10 real tight, like inside of the range boundaries.
Yeah.
And then it just expands. I mean, it didn't really go very far, but still though, in that time, the stock's up, well over 100%. I think even like NKLA had the exact same setup at the exact same time. Yeah, it did. Yep. And it's the exact same setup. So like this is all at the exact same time. It's basically April lows. It all has the same, the downtrend, the big move up, the flag breaks out, right? Like if you were to look at Open right now, it literally looks identical to this,
Yeah.
like that first leg in Open. So if you hold Nikola in your mind and we go to Open, that looks eerily similar, right? Like it's the same move.
Mm-hmm.
Okay, and like it's literally identical. And what did Nikola did? It ended up going a couple 100% higher really quickly. Well, look at Open. Except Open actually has a fundamental turnaround story that I'm much more interested in. Whether it happens or not, yet to be determined. But I'm eager. I'm in the audience.
Is there any losing trades that you can remember that really taught you any lessons that you can think of off the top of your
Yeah,
head?
the biggest one was Tesla. Tesla was the biggest loser, and I should have known better. I don't have the 100 SMA plotted. Let me see. There's the 100. So it was probably one of the biggest positions of my career. Definitely sized up. This was right when Trump got inaugurated, or he announced that he won the election. So I bought on earnings. So earnings was just a week before. I probably sold half or something, but then I got really big size in after hours here, and we just went straight up.
Mm-hmm.
So price moved away from my average really quickly. I basically bought an EP through like this left side peak, kind of this range over here. Let me see if I can draw it. So like that's like the range that got broke, right? So it undercut it, and then it blasted through on the announcement that Trump got elected. I had really like I had uncomfortably large size. It flagged, it went higher, it pulled back into earnings. And this is right where Elon announced that he was going to be doing Doge. And I already had sold a decent amount, but I was still oversized. And I thought that I nailed like the new robotics theme essentially. Like I'm thinking like, oh, this is it. Because if you looked at like the monthly or the weekly at the time, like it looked like Tesla was really just going to rip to the moon, to Mars and beyond. But, lo and behold, it's still within the monthly range. It's still not at all-time highs. And essentially, I let a very large percent of my unrealized gains, which was a considerable percent of the portfolio, come back by not selling before here. So I sold like basically when it broke down here into the 100 uh, and lost it. But this was probably the biggest
What would
open
you
gain back.
what would you have done? Is there anything you have done differently today? Like obviously in hindsight, right, you sell the top, but like if this happened again, is there anything you would do differently, or are you just gonna take that drawdown because that upside was just worth it?
I mean, it's a different spot in my thinking, just in my career, where the idea wasn't, it was beyond a technical setup. I used like a technical like news catalyst and all the momentum to get the shares in, but I was willing to hold it longer because I want to start holding things for a year, cap gains, right? Like that's the idea, like pass Tesla shares on to my kids one day, right? Like that's the idea. So, from a technical analysis, if I would have just, sold when it like lost the 20 or something, just trail the 20, I would have been in much better shape. Or pieced off more, um, as I was going up. Like if I had no like actual conviction in a larger, longer move, but
If you
I
had,
think that yeah, I think that it just kind of teaches tolerance and like this is just gonna happen. Like UNH, like I nailed the low in UNH. I'm in it right now. I have a 43 42 43 43 average. And it just like I mean it's had a big bounce since my average. I bought the UNR this bottom pin reversal. So this was actually me learning from the April lows because it's basically the same setup where you see the MACD, higher low on the MACD. See the price, lower low on the price. I just lost MACD. The thing's just been selling off. Everybody's tried to nail the bottom forever. The news is really picking up on it. Like, how much lower can it really go? So I have that narrative behind me. And I have just this really clean, super high volume low. Like, everybody thought this was the low. This was May 15th. And a lot of people got long here. I mean, look at all the volume. Just for it to go sideways and crack and flush lower, it just flushed all those people out. And so I would just happen to be watching it. I had the line drawn. Um, I already saw what could happen, with April lows. And so I bought, I think this day or one of these days, I think I bought, yeah, August, yeah, 25th. I think that's when I bought, but it was essentially the UNR on volume through this bottom pin.
Mhm.
But it's kind of like it's back to the 100 now and kind of consolidating. I'm prepared to hold this. I've already sold half. I literally will let it come back further. I don't know if I'd let it, come all the way down. I'm trying to get the 200 up, see where that's at right now. Let it sell off all the way down to the 200, but like I'm just kind of at a different spot where I want to hold things longer. And if like this isn't the generational sort of low for UNH, I don't know what is. It's just going to go lower. I've already made money on it, but I want to hopefully be able to hold these shares for several years from here forward. How do I put it on the weekly? Days, week. There we go.
Yeah.
So to me, it feels still like this is a double bottom. This is a low. It's holding up. But if it were to crack, it may come back down and test again. I don't know. We'll see.
Yeah.
That's kind of a more of like a not very PeopleWish sort of trade. Like that's like a newer sort of trade. I wonder if there's some really good like first touch trades that I can think of. Um, that I've traded. BitF. And this was actually one of those first flags, more so, where it broke like a very large, pronounced downtrend. It breaks out, and then it flags going sideways with all of the miners
Mhm.
turning data centers, and then it made just such an amazing linear move. Like this is great chart history for me now. I know it's possible. So like BitF is is one that I'm curious about. It's obviously broken now. It needs like, several months of sideways. I mean, the vast majority of these beta stocks do. Um, there's one that I tried several times, and in hindsight, I probably shouldn't have. It was AAOI. I got kind of too wrapped up into the business narrative, and I just didn't like really focus on the fact that out of all the other stocks that I've shown, like this one just looks like chaos.
Mhm.
But I'm gonna try to like find a spot where I thought was like good when it wasn't. I was like probably like here-ish. I think I got long that day. Like that looks good, right? Like, but if you really just look at the history of the stock, like I'll show you this downtrend, right? Like keep that in your mind
Mhm.
and how wide it is and how choppy it is. But then look at AEVA's downtrend. Like if I'm short something, that's what I want.
Yeah.
If I'm long something, this is what I want.
So
And I think AOI was an example of me um, not really focusing on the cleanliness of the stock and just thinking that it was going to go. It looked like SOUN at the time. It looked like BBAI. BBAI led people to the same fate. SOUN, AOI, they all kind of led everybody to the same fate. And the main characteristic was, for me at least, from a chart, a TA perspective, is just how choppy and rejecty they were.
yeah.
There's like a seller in the tape nonstop.
Yeah. Okay, so you can take off the screen share. We'll go back
Cool.
to how we were earlier, and then I kind of want to get into your routine. There we go. So, what does People Wish's trading day look like? What is your
What
routine?
what should it look like, or what does it actually look like?
Let's do both. What's your ideal day, and then obviously trading's not perfect. What happens? Let's go.
Yeah, I mean, the ideal day is the ideal day starts the night before. So like the trading day starts the night before and it ends the next following night. So it would be scanning. So like I would scan my single momentum watch list. It basically identifies all the momentum leaders in the market. Based on where we are in the progression, I'm adding charts to my trigger list that are actionable the next day. They just basically meet my criteria for where I feel comfortable deploying capital if price move through a level, right? And then I'll set my alerts. And if there's alerts to set, or if there's stocks that kind of meet those criteria, uh, and that's it for the night, right? Like so, scanning. Sometimes I do what I call a deeper scan, where like I'm really trying to figure out what's going on in the market. I'll use like my big scan, which basically lowers the ADR. It allows me to see some of the slower names, just to kind of see what's going on. Maybe I can find some like just understand what some of the business themes are doing. I usually do that when my momentum scan isn't producing a lot of names, which is like a reaction. It's like I don't have anything to do. Let's see if we can go find something to do elsewhere, which is kind of like a big no-no. Like, don't like if it's not there and it's not obvious, it's probably not a good environment,
Mhm.
right? Like that's kind of a lesson that I've learned. But that's what I do at night. I just go through my watch list, try to build an actionable list.
Yeah.
I go through my needs more sideways list, and then in the morning, I wake up and I always try to catch the market open. And as alerts start triggering, I look at them and I execute. That's pretty much it.
Yeah.
Uh,
And so,
yeah.
so that watch list the night before, is there a point where there's too many names? Like, do you try to really nuance it, your focus list? Like, is there a cutoff for how many names you're going to put in your focus list, or if it looks good, it looks good?
No, but I mean, it's very rare that there's like it's long, like it's super long, like it's rare. Like for there to be, more than like five legitimate names on my focus list, that's pretty good. Like that's a good environment, and I'm just getting more and more and more strict with it.
Mm-hmm.
Um, but I mean, no, it's if there's too many names on your focus list, then more than likely your conditions are too loose.
Yeah.
In my, I mean, that's how I think about it.
Mm-hmm.
And me personally, there's never like that many. Um, Now my needs more sideways list could be, which is basically the list of stocks that aren't that are like that could be they're like D League or like they're like the double A's or triple A's. In a couple of days they could be 5 star. Some of them could even break out that next session, whether they had a news event or something, right? But they just didn't quite cut it. I just felt like they needed a little bit more time or something, right?
Yeah.
Yeah, but I can't really ever think of a time where like my focus list has 10 names on it.
Okay, got it.
Very rare.
Yeah. A lot of people journal their trades. Does PeopleWish journal his trades? Do you track your win rate, your risk to reward on average? Do you track those
I
things?
used I did it religiously. And I have more like I used to be extremely systematic with it, where I mean all the ins and outs would get tracked and analyzed.
Mm,
After time or like after enough time passes of doing that, I don't really need to do that's not really where my edge is anymore. That was kind of discovering my edge. Once it's discovered and kind of pushed, um, like I'm not going to be any better of a technical trader than I am right now. Like as good of a technical technician as I am, I may pick up on little things here and there, but like there's never going to be anything that's really going to move my needle, other than really starting to study companies uh, and investing. Um, yeah, yeah. Sorry, I didn't mean to go off on a tangent there, but that's kind of where my mind wandered.
no, it was great. Do you do weekly reviews, monthly reviews, those kinds of things?
More so, I stand in the shower for a long time and I just ponder my life. That's kind of my review. So I
Okay.
ponder I don't do it in the same way I used to, from like crunching numbers and like correlating my actions with time of day, time of year, correlating all of my actions with where the cues are, where the SPY is, correlating my actions with just many other uh, things that should be lining up. Like, am I basically working against the grain? And that was one of my main things to figure out, because the easiest thing I think for new traders to figure out are the patterns. Like, it doesn't take that long to figure out the patterns. Those are your tools, right? But really understanding the fine pointed nuances of how to get good entries and when to do them, that is like what really takes a lot of time. And so, like, it's really easy to go back and look at the last 5 years on a daily chart. But then, like when you're in the arena, when you're battling, when you're entering, like in the heat of the moment, like intraday, right at open, it's really hard to go back and study those times. I mean, you can. There's tools that allow you to do it, but most people don't think about that, and that's also why most people are so good at recognizing daily patterns, because it's not that hard, really. Like, I guarantee you right now, if I took a room of 20 people who don't know anything about stocks, but I sat them down for an hour and I showed them the characteristics of what we consider good setups, and then I were to show them, if I were to condition yes, no, yes, no, yes, no, yes, no, they would all start scoring 10 out of 10 really quickly. It would not take long at all. But if I all of a sudden then said, all right, you're ready to go trade some stocks, they probably wouldn't do that well. Because it's just not that. It's knowing when to. I actually had a really good analogy today, and I don't know if I want to use it, but it has to do with HVAC and air conditioning and dehumidifying a room. I'm not going to go into that right now, but you basically have these multiple components all working against one another, and it's the balance of them all. It's overall market health, right? However you decide to measure that, a very easy way is the 10-day simple moving average above the 20-day simple moving average. Are they both sloping up in the triple Qs? If that's the case, then the largest companies in the world are more than likely trending higher. That's a very, very, very easy risk on, risk off metric. Another one that's more nuanced would be the length and quality of your watch list. Those are the things that that take time to develop. Like anybody, like if I told you that, like, don't trade when the 10 and the 20 are slipping down, just don't. Okay, fine. That's very easy to say. I get it. But like it takes you a lot of suffering to like trust that,
Yeah.
because you're in the discords, people are in the discords or on Twitter, and they see people making money, and they see like the last week that we had and these big candlesticks. And it's like, oh my God, these people are getting long. Like it's not the people that are getting long are the same people to get long in all environments. They don't have any filter for their actions. So these people are literally, I mean, like, okay, yeah, they bought these moves and they caught these big moves last week, but they also bought a ton of moves 2 weeks ago and they got absolutely crushed.
Mm-hmm.
So it's like, it's knowing, like being able to filter out that crap. Now, mind you, there are some actual like legitimate setups that have triggered in the last week or so that I think are great. But also there's a ton that like didn't. And I think a lot of those people are going to get crushed.
Mm-hmm.
So it's kind of figuring out like you have to define your North Star and stick to it. And I think people that like if you see a setup that appeared in the last year 20 times across the market and it led to big moves, why trade anything else?
Yeah.
If there was literally only 20 instances of that setup and they led to big moves, like why not just focus on that? Well, it's hard to because they don't come around too often, right?
Yeah.
People want to make money now. So but I mean that's like what it takes though. It's conditioning yourself early on to like, really try to figure out like a single formula for making money in the markets and just stick to it and just actually prove to yourself that you can make money consistently. Like you don't have to be this jack of all trades, this person who wears all the hats. Like, you don't have to be shorting and buying parabolic longs and EPs and like, all of these things, like when really like just do one thing. That's my thought.
Yeah.
It's hard though. It's hard.
Yeah. Now I want to get a little bit into mindset and psychology. So, were there any big mindset changes for you throughout your trading career, or any big shifts mentally?
The biggest, most profound recently is the vast majority of the time, myself and my peers, we're right about the trend. Like the vast majority of the time. But we still get chopped out of stuff all the time. Why? Too much size, buying too early. So like the big mindset change is less size, giving yourself more room, and truly, truly asking yourself, has the trend been invalidated? Before you just sell. If the trend is still valid, don't sell. And that has been kind of like just because the stock closes below the 10, like, if you have a very rigorous rule where you buy a breakout, you sell 50% day 5, and then you trail 10. The first day that it closes below the 10, you sell. Okay, great. That's like an awesome entry level trend following strategy and profit taking strategy. But like a profound next level is, okay, zoom out. Is the trend actually broken? Like, is it actually broken? And oftentimes, no. And so that would be like a big thing for me. Yeah. And then like the other really profound thought is like, if I would have just nailed 2023 low, or like even any time in 2023, and had a lot of conviction in the businesses and the overall business climate, the acceleration of the quality of the things that these businesses are producing and the efficiency at which they're producing them. If I just had that like thought process, and then the idea of holding things longer, that's also like a really big. That's what like honestly forced missing most of April lows. On top of, I gave myself a break with 2023, but missing April lows as bad as I did. I mean, I still caught a couple of moves, but not nearly as much as I should have. Was like a real like eye opener for me. Like I should have been buying that with the idea that I'm going to be holding these companies for a long time.
Yeah.
But yeah, I mean those are the main things I think. Oh, I like a little tricky one too. It kind of goes along with the first point was okay, using yesterday's low a lot of times helped because so often I would be right in the trend and I would get like I would just buy wrong. Like my entry just kind of sucked. And then using like previous days low, because previous days low still just may be 0.25% drawdown lower on my account than low of day. or even that 10-day SMA, right? Like that may be slightly below low of day. And like so often I would just set the stop, take it off my screen, I'd come back, I'm stopped out, and then at the end of the day it's closing higher, or the next day it is, right? So but I mean, these are definitely like I wouldn't like anybody listening. I wouldn't say like just go out and just like follow these things. Like I think it's really relative to where you are and like what your goals are overall. Yeah, I mean that's what you have to ask yourself. Like, what are your goals and like realistically, what are your how much time can you allocate to them in the markets, and then that kind of points you where to direct your attention.
Yeah. And obviously, day trader rehab, you see a ton of traders in the sandbox. What psychological mistakes do you see the most, or what is like one that just like stands out, and you're like, oh my gosh, just stop doing this.
Um, so what is the most common? Yeah, let me think about that for a sec. I mean, I think a lot like I see so many people like buying dips and stuff. Uh like without like I see people buying dips in the absence of momentum. Like when stocks are breaking down, they're buying dips.
Hmm.
Like the people that like buy dips in stocks that are like down a lot are like investors. Like those are the ones who are like, and then they're gonna start averaging in over the course of weeks or months, right? Um, but I see like, you know, I guess it's just like the oversizing probably is one, and then it's just like buying just random stuff. Like it's very. I don't see a lot of people say I can't think of anyone really who except for like Louis or there's a few who literally just trade one setup or um like slight variance to one type of setup. Uh, and I for whatever reason, I mean I understand why. I think why most people can't do that. But that's definitely probably like the largest issue that I see is people just can't take their finger off the button and just focus on a single thing. And there may be days, weeks where that thing doesn't occur and you do nothing. Even though people around you are like buying these dips and like, these big green candles for a couple of days and like you have to like resist, like you just like do nothing because and I hope people are listening, especially in the sandbox, kind of realize this because I mean if you can just like go back to the framework that you use to get to this point, which is study all of the conditions that led to really big moves, you'll know that there's times where those conditions are true and favorable, and there's times when they aren't. And we need to align ourselves mentally and we need to preserve our capital. So, like, we made a bunch of money in the last run up, but yet we're buying dips and things and whatnot on the backside. We just give it all back. And then the next run up, we don't have anything, to do it again with. And like that is probably like the if everybody in the sandbox were listening right now, that probably hits home with I would say the most of them, where they probably did make some good money on the front side of these moves, but they're still just like so active right now. I mean, last week I think I made like two trades, maybe three, and I don't think anything even stuck. CoreWeave is the only thing that stuck really. I can think of off the top of my head. Um, yeah.
So one thing that you did very unique with day trader rehab was you connected it to charity, right? Most trading discords or just trading communities, you know, you don't donate to charity and then trade along the mentor side. Why did you do that? What was the your motivation there?
I mean, I looked at it like if a couple thousand people joined, I mean, and they were paying, I don't know how much a month, like it wasn't enough money to like deal with the business side of things, really. So, I mean, a lot of people were hitting me up on Twitter and like, I was, I stopped posting like big P&L and stuff a long time ago because it just kind of attracts attention from all the wrong people. And anyways, a lot of people were knocking on my door trying to learn how, there wasn't a lot of like Qualamagi purists. Uh, and like me, I would say I'm not the purist, but I probably have systematized it, or at least thought about systematizing it the most, at least out of the people I know. And so that was very attractive to people just due to his success. And so people gravitated and, instead of me typing and repeating everything, a zillion times, which I actually like repeating things because I get better at. It strengthens my delivery and my thought about the subjects. But I just eventually just opened up Discord to the public, like it was my journal essentially,
Gotcha.
right? And I was like, I don't really need like the money. I don't like. I mean, obviously I need the money. Like I'm a capitalist. Like pay me, but I really didn't have too many philanthropic things going on, and like I have other businesses and whatnot. So like, I was like, all right, let's just try to help some people. Let's get them in here, build a community. It's fun. Like being, not talking to people all day as a trader kind of sucks. Talking to the same few people over and over kind of gets frustrating. So letting people in and learn from the chart database and just all the thoughts. I was like, all right, just donate to charity and I'll let you get in, because I was just going to let everybody get in for free. Like, but then it would just be flooded, right? And it'd just be, a real crappy place.
Yeah.
So I was like, all right, let's at least make them pay something.
Yeah.
And so we started at like $300, and I think most people, well, a lot of people donated that, but now we're at 50. We have a few thousand people in there now, and it's actually really starting to grow. But yeah, I mean, that's like the whole idea behind it.
Yeah.
I don't know why I didn't charge for it. I think it's because then I had to deal with the business. Oh, I know why I didn't charge for it. Like, I know the real reason. Because my OCD and my like perfection complex, where like I need to do things like really well, I couldn't start a business where I couldn't give it full attention. And so like if I were to really start selling something, what am I selling? Right? Like my sloppy, back of the napkin chart database that like is for me, that like people could sort through, like a I don't know, you bought like a lock it up self-storage on auction. Like, yeah, you may hit the gold mine. I mean, it's in there. I mean, literally everything that I'm saying and everything to be successful is within the chat history of Day Trader Rehab. It's just going into them hills and mining out the gold and finding it and piecing it together.
Yeah.
So like, I was like, all right, here's a pile of a lot of garbage that contains a lot of gold. So like that's not a business. So for me to actually sell it to people, I would need to pull out all the gold and spoon feed it, and I just wasn't in a position to do it then.
Yeah.
And I don't think the upside was really worth it.
Are there any transformations within the community? You've been doing it for a couple of years now that stand out. A couple people. I know.
Yeah. Oh yeah. Oh yeah. I mean, there's a lot of people who went from nothing to something in Day Trader Rehab. A lot.
Do you think there's
Yeah,
do you think there's anything that separated those from the others?
I mean, they all kind of started in the same place. I think it was, if I had to like sum it up, like meta, it's like they just had enough. They just stopped, and they just really got serious about their health. Like people getting really serious about the health. They start going to the gym. Like anybody who's in really good shape, which I'm not, I have super high respect for. Anybody who can go to the gym consistently, I have super high respect for it, because it's so hard to do mentally. Like it just sucks. Like there are some freaks out there who just love it, and like kudos, to them. I don't even give them nearly as much credit. It's like the people that like legitimately hate it, but they do it anyways. Like it just sucks. Like I think that's like the breakthrough. Like where they're like, I'm done. I'm done oversizing. I'm just done. Like I'm not full porting anymore. Like I'm done. Like I'm sick of it. I can't handle it anymore. I'm just going to commit. And then they just commit to like 15% positions, and like you like chant to yourself like, I'm going to get paid over time. I'm not going to get paid with size. I'm going to get paid by time, not size. And you do it over and over and over and over. And you know that you're going to ride the trend. And then you buy, and then all of a sudden a month goes by and your account's up 20% or something. You caught a good cycle. And you're like, whoa. And like the stress on the backside, well, everything's below the 10. There's nothing to do. But you scan every day. Like that thought, like that, like going slower and just slowing everything down and filtering it out. Like I think that is like the difference between the people that are still frantically scrambling every day, trying to make a trade, trying to make something happen, regardless of all the moons aligning, and those that are just literally doing nothing, chilling, sitting on their pile of cash that they just made over the last couple of months. And I think that's the main difference. Like the pro traders, right? Like if you were to look at the trading floor, it's quiet. Nobody's even talking. They're on vacation, right?
Mm-hmm.
Regardless of the bounces we had last week. But then there's other places in the server that are just loud chatterboxes. Well, it's a pretty good sign when, people on the trading floor who've made literally like, tens of millions of dollars or more are gone. They haven't said a word in weeks. There's probably a good reason for that. If the market was so hot, don't you think they'd all be there?
Yeah.
So I think that's the main thing between the people that have really leveled up is like they just buckled down and committed to a longer game.
Yeah. And so, what is a timeline that new traders should expect for success? And what was your timeline for like when you started seeing profitability? Um, yeah.
I mean, like yeah, like real meaningful profitability came in like 2023. But I mean, I don't know. I think enough. The market has to go up a lot, and then it has to go down a lot,
Hmm.
and then it probably has to go up a lot again, and then probably down a lot again. And I think after those like those two peaks and two troughs, and you're still in it, you should have a pretty good understanding of the cycles. So it's enough time to go through cycles. Like I'm not going to put like a year, like a set of years or time. It could be relative to your opportunity set. Like if your opportunity set only happens so often, it may take longer. It depends on where you're starting. If you're starting as a day trader, well, the same patterns that happen on a 5-minute chart happen on the weekly chart, right? Like if you were learning patterns on the weekly chart, it would take you a lot longer to learn patterns and experience them than it would if you were learning them on the 5-minute chart. Even though the same large flat top base happens on a 5-minute chart as it does on the monthly chart, right? So it kind of depends on where you're studying things. It depends on you, but I would say as like a mean for successful traders, and I hate to say it, but they're pretty decent early on. I mean, like they may blow up a few times, right? But like Kulamagi, for example, I mean, just a couple of years in, he turned his 5,000 to a million. Ariel right out of his stint, he turned 14,000 into 3 million in a short period of time. I mean, these are like also catching really incredible waves. Um, but I think that you should overcome whatever's holding you back really quick. If you don't see advancement, everybody's if you're making the same mistakes for a few months straight, you understand what they are. Like everybody kind of does. Like they know that they're clicking the button too much, or they know that, I mean, it's usually in the wrong times. The sooner that you're able to just stop oversizing in bad environments, bad positions, essentially, I think that's what kills everybody. You just stop and you commit, like your growth trajectory will just vastly improve. It'll just accelerate. So it's like the quicker you're able to overcome that and just kind of, this is as a swing trader, the context of being a swing trader, and just commit to 10 to 15% positions and actually being patient and trading in the right environments, the faster you'll find success. The longer you fight that, uh, the longer it's going to take, and you may never make it.
Yeah.
And this is just specifically for swing trading. Like I'm not speaking about day trading or investing or any other styles of trading.
Yeah. Um, One question that I got from Twitter for you specifically, kind of goes back to the charity thing. Where do you find the motivation for what you do in DTR for no financial gain?
I mean, I mean, you know me for a while. Like I don't really care too much about you know that side of the equation. It definitely stimulates my mind, I think, and I love the stock market. So I created there at the time there were no communities around swing trading. Like there was no place that you could go to and like there's 100 people active all focusing on the same thing you are. I mean, there's like the Kulamagi group, that was one, but yeah, so like that was one reason just to build community. Um, and then also obviously a place for me to like I'm already like it's kind of like in your friend group growing up, like your house is the place that everybody comes to. Like I'm already chilling at my house. Like and I have, whatever the games or I got like a comfortable spot or pool table or something. I didn't have a pool table, which I did. But whatever it may be, like I'm already here. Why doesn't everybody come? And that was it. Uh and it's not like a lot of work for me because I'm doing it anyways. Like a lot of these guys streaming live trading, it's not work for them because they're literally doing it anyways. They just turn it on. Now with DTRP Pro, which I'm building out, just test ideas and see if it can evolve into something bigger. That is a little bit. I am investing some time into it because I think it'll be a foray into other opportunities, and who knows what it may turn into. But yeah, I mean, I don't know because it's not that deep.
Yeah.
It's not that deep, really. The incentive wasn't large enough.
Gotcha.
But I don't know the motivation. I don't know. It's like my home. Like the Day Trader Rehab is literally, it started as my journal. It's like my living room,
Yeah.
basically.
Yeah. And then final question before maybe we can get a little bit more into DTR Premium. What is the number one lesson from your journey, and what would you tell your younger trading self? If you could sum it up.
Mm, that's such a hard question. I guess I'm gonna think a little harder. This is taking a lot of compute. Um, I guess focus on the bigger picture overall and not rabbit hole your thought and your efforts too much into a single, like, try to zoom out more and think. Like, my younger self has so much runway ahead of him that the frantic scrambling in the moment to make something is equivalent to trying to drive a truck with bald tires up a muddy hill, when one of the best ways to get out of a muddy, slippery spot is just to kind of go slower and gain some traction and think about the bigger picture, really. And it would be like, in a stock market context, the stock market always goes up, and innovation is not slowing, it's accelerating. So those two things combined, it's extremely strong indicator that the market is going to keep going up. And if that's the case, you should never have FOMO. You should never be trading in instances where your setups aren't present. Your playbook isn't present. If I would have like truly harnessed that then, and I'm still harnessing that now. I'm just getting better at it. And if I would have started that journey of harnessing it earlier, I don't know. I mean, like, that I would probably have avoided a lot of stress, uh, and just like undo, like, in the moment franticness. Not so much like, just like trying to succeed. That's what I would tell my early self.
Gotcha.
Yeah, and then also know when to cut your losers. Uh, Not just in stock trading. That's pretty easy. You sell it when it's below the line, but in other endeavors that consume your time on a daily basis, which could possibly very well be stock trading for some people, or at least all day, right? Like, it may be a net loss sitting there for 8 hours. You may only need one. Having those kind of like big picture kind of realizations, but overall it would be zoom out. And I mean that like in the broadest sense, from stock charts to looking at what you're doing on your daily basis. Zoom out and look at the long game.
Gotcha. And so, where can people find you? Where can people find you? And maybe go a little bit into Day Trader Rehab Premium.
I mean, I'm on X, so you can find PeopleWish there, PeopleWish. You can find me there. I'm like a genie lamp. And then Day Trader Rehab Premium is still something that's kind of, or Pro is basically my realization that most people in the markets blow up, and it's not due to. It's the equivalent of the vast majority of people would blow up airplanes if they didn't have proper training before flying an airplane. And then even if they do have proper training, if there's no proper pre-flight checklist, you really run the risk of killing yourselves or others or causing serious property damage. So I think that with a proper framework, I think we can really prevent financial ruin in a lot of young individuals, and kind of provide a safety net for them to learn, how to participate in the market, like in a real way, other than just like giving your money to like a fund manager, like actively participating in the markets, without getting wrecked. I mean, the answer is simple in most people, which is like paper trade or whatever. But still, that paper trading doesn't really protect people. But I mean, it's still kind of evolving. But I mean, that's the general idea. Right now, it's kind of like the turtle traders. I don't know if you're familiar, but it's us developing just static rule sets for people to follow. Where that part isn't hard. It's really working on the ability to resist temptation, buying stocks, participating in the market when you shouldn't be. Like I was saying earlier, that's learning the patterns and whatnot isn't really the most difficult thing for people. It's learning when to use the patterns and then doing nothing when, like, you don't run red lights. Well, the light's red. You don't run it. You might get smashed by a car or pulled over, right? It's kind of the same idea. So what will Day Trader Rehab Pro be? I don't know, but it's going to be a group of much more focused system-based traders, and it's going to be an extension of Day Trader Rehab. It's still in the very, very infancy, but it's something that I want to do to test some ideas in the marketplace. Probably not a good way to totally plug it, but I mean that's what it is.
Gotcha. Yeah. And that's all I have. Again, we appreciate you coming on. First interview. It was amazing. Thank you very much. Any final words?
Those are the best interview questions I've ever been asked.
Oh, awesome. I appreciate it.
I mean, I've never had another one, but I mean, actually, I did the other day, but they were really good. They were really good, Ashton. And this was a great discussion, and you got me to think about some awesome things. And my mind's still going to be running after this. So, yeah, dude, thanks for having me on. Honored.
Awesome. Thank you very much.